Hey guys, thank you for joining in on this wonderful Friday. Uh, yeah, I guess I'm sure everybody's seen the crazy inflation report, and it doesn't really help us in the real estate space, whether you are a banker, realtor, doesn't matter, or buyer for that matter. It's just crazy. So I'm Upen Patel, SVP with the Federal Savings Bank. I'm licensed in all 50 states. We are a federally chartered small, mid-sized bank, and we're veteran owned. Love our veterans, so thank you very much there. And yeah, we're just kind of here to share information, give you some knowledge. Uh, Welcome to call me anytime or take everything that you learned from me to your bankers, and hopefully that helps you guys kind of do more transactions in this crazy high interest rate and going up mortgage rate market. Quick disclaimer, right? This is just educational. Don't want anybody to kind of call me after this call and say, "Hey, you underwrote me. You got me approved." Welcome to call me anytime, but so it's just a standard disclaimer. You can read it. I'm not going to go through all the details on here. You're welcome to just pause the video later and kind of see what we do. But we are a 50 state bank. I can do everything we're going to talk about in all 50 states. It's all in-house underwrite, quick scenario turn times, and that's all good stuff. Right, so we'll talk about some of these key differences. I mean, there are lots of lenders out there. Obviously, a lot of them can do a lot of things. There are a few things that I can do that the bank allows me to do in all 50 states that others can't. And I'm not going to again read through all of these. We can kind of cover them if you call me or not, or and we'll talk about some of the portfolio loan programs specifically, which I believe are some of the key distinguishing factors and very attractive rates that the bank has to offer that will help everybody. Yeah, so let's kind of jump in. Stick with me through the next 15, 20 minutes to find out on how you can do transactions at attractive rates, help your clients, whether you are a listing agent or a buyer agent. Because guess what? If you are a smart listing agent and you know about these programs, you can share these with the buyer's agent who might not know about it and get a transaction done. Because for you, at the end of the day, a transaction is a transaction, right? Whether you are buying, selling it for somebody or and helping them sell it, or you're helping somebody else buy a property. Okay, so let me see. I got too many monitors here. Okay, so first off is an owner occupied program that the bank recently launched. It's a medical program for medical professionals, healthcare professionals. And I kind of say healthcare is because a lot of times people just think about medical as in like, oh, a doctor, a neurologist, or something. And it's like, oh, what the heck? They don't really need a great program. Well, they do, right? I mean, they do, and there are lots of other medical healthcare professionals who can benefit from the program. Right? Some of the issues that we typically hear about for folks in the healthcare space is they don't have too much cash on hand to be able to buy that dream home, or they just kind of came out of nursing school, or they just kind of graduated from and got their residency done, don't have got a job lined up but haven't started that job, or their credit's low because guess what, they took on some credit card debt to put themselves through college, and ding ding ding, right? DTI. Education's freaking ridiculously expensive. and doctors pay the highest price on it, right? They come out with lots and lots of debt, and because of that, they don't get qualified, or for many times can never get qualified for a home loan, which right, which kind of excludes them out of the dream of home ownership. So this program is meant for all of them. They're kind of here, right? We talk about, oh, medical heroes saved us and the community in the last 2 years. Well, this is for them, right? So we cover a wide swath of medical professionals. Again, not going to read through it here, right? Some of the things that might stand out is like, we'll kind of cover psychologists, dentists, veterinarians, nurse midwives, right? So the point being that we're going to cover a very wide swath of medical professionals, healthcare professionals, and right, while I cannot make a commitment to it, if the individual is in the healthcare space, been there for a while, and has a good stable income, even if it's not on the list, I might be able to go to the loan committee, because this is a portfolio loan. So you're not going to find this scenario or this kind of wide coverage with anybody else other than me at the bank, right? Because it's a bank's portfolio loan. So I can, go to the loan committee, and we might get lucky and be able to kind of do a transaction that is not for somebody that's on this list. And so, what does this really kind of awesome program, right? 0% down up to $1 million loan. That pretty much covers the majority of the country, right? 5% up to 1.5, 10% up to 2 mil. So you got that neurosurgeon wanting to buy that 2 mil, 2.2 mil to be at, right? A mansion, done. 5%, 10% down. Right? They can do it all day long. Obviously it's an owner occupied transaction. It's a 1 to 4. We'll cover a 1 to 4 unit transaction, right? So this is for somebody who's young, coming out of med school, young professional, maybe a nurse, and they want to right, buy a multi-unit property. They can buy a multi-unit, get rental income from the other units, and be able to live in that property. How cool is that, right? $1 million 4 unit, 0% down. Best part, or one of the best parts, no MI. Doesn't matter, even with the low down payment, just because they're doing 0% down or 5% or 10%, there's still no mortgage insurance. Now I cannot disclose rates online, or right, happy to do that one on one. But what I'll tell you is these rates are kind of like, think about kind of finding a time machine and going back in time. Yeah, you're kind of dialing back the time machine by give or take a year. So rates are very attractive. Combine that with no mortgage insurance, and their payments are and rates are going to be ridiculously low compared to where the market is today. And right, we talked about the issue of them kind of facing issues with credit. That's fine. We will go down to 660 credit, and there is no hit to the rate. Right. Couple more things right within the program, which is kind of standard, but just want to kind of state it out, is that there are certain programs that will not allow established professionals to use it. We don't have any such restriction. We would love to work with a professional who's been in the business, right, been a medical professional for 10, 15, 20 years, and they're just wanting to get that new house, or maybe they're moving and that's why, right, moving up, or somebody who's just brand new, just graduating. We can use income up to 90 days out, right? So it's ideal for this new graduate, right? This is graduation season. Go out and find those doctors and nurses and dentists and right, everybody else, psychologists, and they can go, if they have a W-2 job, a salary job lined up, we can close on their dream home tomorrow. And the best part, right? For those new graduates, they came out with lots of debt. Don't have to worry about it because their payments are currently deferred, and then it doesn't become part of their debt to income ratio. So they can qualify without having to take on the burden of that additional monthly payment, which might now either disqualify them or qualify them for a whole lot less than what they really are looking for. Right. So I don't see any questions online. Right. If you guys have any questions, go ahead and post them out. I can address them, or we're gonna you can reach out to me directly, and I can address them one on one. Going on to the right, so second home loan, vacation home loan programs. Right. Now, yes, Freddie Fannie theoretically says, hey, you can buy a vacation home 10% down. Good luck finding any rate available. You can call any banker you want. You can call your preferred banker, call me, call online lenders. You're not finding a rate for 10% down. We will do 5% down. Yeah, that's right. If your clients have credit at 720 or better, they can do a second home loan for as little as 5% down. Obviously, one unit residential and no mortgage insurance. So not only do you know how to deal with right no rate available, right, doing 30% down or something crazy like that for them to be able to buy this property, we would do it 5% down, no mortgage insurance, and we'll go up to all the way to the max county limits. Right, and depending on the region, right, and what county you're in, that limit's going to be different. So you might say, yeah, okay, big deal, Upen, right, 5% down. How does it really help me? Well, would you like to be able to do this with the buyer's agent and say, hey, how about this? Right, your buyer can now buy this property. Let's go on. Investment loans. I specialize in investors. I work with investors. Many of my clients have worked with me for 5 years, 6 years, do all their investment transactions. And I can tell you, investment rates are pretty much just as messed up or worse than second home loans. There's just like no transactions, no rates available, and most definitely not for cash out refinances, which a lot of investors do, right? They will go out and buy a property in cash and then want to do a delayed cash out refi. Well, guess what? No rates available. We have the program where it can be again right with 720 better or better credit, as little as 15% down, 1 to 4 unit. That's right, not limited to just a one unit. I know Freddie Fannie will allow you to do a 15% down on a one unit. We will do a 1 to 4 unit, 15% down, and you guessed it, no mortgage insurance. Right, so low down payment, no MI, and we'll go all the way up to the maximum county limits. And now, one thing I know a lot of investors will ask, and I'll just be upfront in this, like, no, these are portfolio loans. We will not close them in LLCs or land trusts or something like that. We follow Freddie Fannie guidelines. These are not debt service coverage ratio or DSCR or no doc loans. These are full doc loans, but with very attractive rates. Again, right, I can't share rates online or like in a mass post. Call me, be happy to share the rates with you. So, what does this mean, right, in terms of a transaction size? It's so it's nuts, right? So it's a really high uh, loan amounts, transaction size. So all my realtors out there, right, in the high cost areas, or even the regular normals, right, 1.5 mil, nothing to sneeze at. So, right, so that's the investment, right, investment transactions. Again, very attractive rates, well below what the market rates are. Uh, let's see what else. Yeah, there's no limitations with regards to the number of properties, right? So we will have up to a $5 million exposure to any one investor. That's a lot of money, and I know there are lots of investors that have multiple properties. This would not be limited to the Freddie Fannie limitations of 10. So I'll leave that out there. Couple more simple things, right? Consumer loans. Everybody obviously knows about consumer loans, right? So big freaking deal open. What the heck do you have to offer here? Well, one is it's right. This is again a in-house portfolio loan, and we think creatively, right? So think about a scenario where right, the borrower's got their too much credit card debt, right? And Fed rates are going up. Well, guess what that's doing? Their monthly payments going up. We can get it consolidated, lower their monthly payment, their DTI gets better, and maybe cherry on top, their credit also gets better because now their debt, credit card utilization is dropping, which should be boosting their credit as well. Right? That would now get them qualified for a loan that otherwise they might not be qualified for, or maybe they get some qualified for a house that was maybe a reach for them. Renovations, right? It's a really good, perfectly valid house. Doesn't need anything. Maybe just needs some new flooring. Uh, you know, uh, paint something, right? You don't need to do a full-on renovation loan. I mean, hey, it's good for me, right? I would love to do a renovation loan and then refi them out, but I always think about what's right for the client. So this would be an ideal scenario where we would use a consumer loan, get them some cash in hand, 15 grand, 20 grand, 35 grand, that they can then use to go ahead and do that minor renovation that they want to do on their new house. Or they're just kind of freaked out, right? All their cash is kind of getting sucked up into the loan. They don't want to right, be left with nothing. Well, they can replenish their funds, and then as their bonus comes in or income comes in, they can just go ahead and pay it off. Parking spots, right? All over city dwellers, right? They want to buy a parking spot. It's not deeded together with it, so obviously they can't get a mortgage on it. Well, this can be used. So the point being, these are just some examples, right? It's not the end all be all. Think outside the box. Right? What can you do? That's what's going to be the distinguishing factor between for all of us, right? Whether it's you are a banker, you are a realtor, you are any other part of the real estate industry. What's going to distinguish and make you successful this year, in the next couple of years, as things get really kind of tight, is how are you going to think outside the box? Be creative, think outside the box, work with a banker like me who thinks outside, strategizes, tries to figure out how you can kind of really put a transaction together that otherwise might not be working. And one thing that I didn't kind of include on here was a bridge loan program. Again, lots of lenders have bridge loans. Nothing new, nothing like right, nothing that nobody else has done. But a realtor that I work with, and thank you for kind of pointing that out and reminding me, I am licensed in all 50 states. What that means is if you have a client, whether it's a buyer or a seller, and they are moving states, I can still do that bridge for them. They are not, unlike that local broker or local banker who's local, that's why they call it, right? Who might not be able to do it and they're not licensed in all those states. I can, right? They can, you got a buyer moving to Florida from New York, that's fine. I can do that bridge for you. Moving from North Carolina to Seattle, that's okay. It's the point being, call on me, call on somebody else if they have some options to be able to get it done. I'm not here to kind of disrupt your relationships. I value my trusted relationship with realtors, and I'm sure you do as well. But I'm here to add value where I can to be a win-win-win for everybody. Thank you for your time. Really appreciate it. And enjoy the rest of the day and have a good weekend. Bye, guys.